Hello, and welcome to Let's Talk Tax, the show for growth-minded CPAs and real estate pros in tax. I'm TJ Sponsel. Joining us today on Let's Talk Tax is Audrey Carnall. Audrey is a senior tax consultant in McGuire Sponsel's R&D tax practice area. Welcome, Audrey.
Thanks, TJ.
Well, today's episode, and just to give everybody background, Audrey's been with us for a number of years, manages many of our good clients, some of our larger clients, and she has just become a tremendous resource for our alliance firms and clients over the years. So, Audrey, I know your first time here on Let's Talk Tax, so a second welcome, and look forward to today's conversation. Audrey, today I wanted to talk about, with the situation with the R&D tax credit, since the memo statements were required a couple of years ago. Obviously, we're trying to prepare all of our clients for these new requirements coming out. And so, not to sound like a real boring topic today, but I think it's an important topic, is documentation. And so what I really would like to do is really, as your experience in leading so many of our projects, is the fieldwork process and what we need from our clients. You go back 5 or 6 years ago, and obviously we can use estimates and we can use oral testimony and such like that. But with the documentation requirements on amended returns and what's coming up for the 24 tax year, I really want to dive in a little bit and give everybody a good understanding of what's going to be required from a documentation standpoint in building that R&D claim that can withstand the highest levels of IRS scrutiny.
So there are quite a few different pieces of documentation that are going to change over the next year that's necessary to claim the R&D credit. And right now we're working internally to develop some of those to take the pressure off of our clients, to make it a little bit easier for them. So that'll come out within, the next few months. But in the meantime, I do think that there's a few things that clients can do to better prepare themselves for what's to come. So a couple of those things would be beginning to track projects as they're happening. So whether that's a simple Word document with a list of their qualified projects, or maybe it's going as far as changing a few things on their time tracking to make sure that those projects are in order and make sure that the tasks associated with them are in order as well. So there's a couple of different things that we can do. It always depends on the client, what's best for them. My biggest suggestion is for us to meet with each client ahead of time to make sure that we're doing what's best for them.
We've been so fortunate, Audrey, over the years. I mean, obviously, hundreds of clients that we've had the good fortune of serving on an annual basis. Obviously, a lot of different types of industries, a lot of different types of sizes within those industries. Mm-hmm. So we have clients that are pre-revenue. We have clients that are $2 to $3 million companies, and we have clients that are multi-billion-dollar companies. With all of those, there's multiple different people involved in the development cycle. Okay, and it can start from the technical salesperson all the way through to that quality inspector. Okay, when we look at it, because this is a wage-driven credit for so many of our clients, how does the documentation be? How do we look and how do we prefer documentation? Because here's my point: if I am the technical salesperson and involved in that design engineering, that initial design and engineering of that concept, that part, whatever the case may be, and I'm the engineer that's doing the drawings, my documentation is really good. But when you get to the factory and you're starting to build that part, you got a frontline operator, you got somebody in the front of the machine, or their time tracking may not be as strong. As we go about and approach those situations with our clients, obviously we don't want to neglect the people that are on the factory floor because there's a lot of dollars there that can be recouped. But the documentation is so much stronger in the front office or from that CAD program with the engineer. How do we navigate that issue?
I think it really depends on the client, but if we're taking the example you just gave, there's a couple of different things I think that the people on the lines can do. I think the best thing to do is track that contemporaneously, whether that's through a piece of paper even that they have with their qualified projects on it, or realizing that maybe their time is tracked to a project which is also tracked with supplies, and we can pull that easily. But really working with that accounting department can also be a huge help for especially the people on the line that may not be tracking their documentation as carefully.
Being here in the Midwest, good old-fashioned manufacturing, parts manufacturing. And you'll walk around that shop floor, and I love plant tours. I mean, after 20 years of doing this, I still love an old-fashioned shop tour because you can walk around and see qualified research, okay? And you'll walk by, and I'll never forget, there's so many that can pop into my head, but you're walking by a door, and it's just a room, and you ask the plant manager, hey, what's in there? Like, oh, that's not qualified. Well, I go, well, what do they do in there? Well, we do PPAP certification. Well, that's pretty important. There's a lot of money in there. Let's walk in there. I think it's going to pay for itself. Or you're walking by and you see a tote of parts that are just sitting on the floor, and you're like, what's that? Well, that's scrap from this job that we did for Pratt Whitney, whatever the case may be. Is that control sheet that follows that part around, can that be beneficial in helping link somebody to a project?
Absolutely. Yeah. Any sort of documentation like that can be so helpful, especially in tracking parts. Obviously, we know supplies are not the largest driver of the credit, but it can really be a cherry on top. And we want to make sure that we're helping clients claim everything that they should be able to claim, which can include those supply amounts. So that can be really helpful with supplies, but it can also be helpful when we're trying to track down somebody's time on the floor as well. Any of those pieces of documentation can really be helpful, especially for those that may not be tracking their time to maybe a time tracking system.
What would you say are some of the industries or companies within industries that struggle with documentation more than others?
I think you hit the nail on the head with manufacturing. It's just not a process that is inherent in that field, which we totally understand. And I do think that we have documentation internally to help with that. But that is usually one that we see struggle. I do a lot of manufacturing firms, especially up in Michigan. I was just at one last week that didn't track their time at all. And they also couldn't figure out how to track down their supply costs. So we worked with the plant manager, with the CFO to figure out how we were going to be able to claim those expenses. So manufacturing, definitely. Usually the better ones that have the time tracking in a way that we typically use would be any like computer science companies working on software, or architecture firms usually have great time tracking as well.
When we say documentation, obviously any time we do an R&D study, there's a portion of what that study is that we're reconstructing that documentation, or we're trying to put it in a format that is acceptable to the IRS. Can you explain to our listeners what that is for somebody that's not familiar with the R&D credit? Because obviously, if they filed a credit, if they're a CPA on listening us today and they have a 6765, they're used to the old 2-page form.
Yeah.
Now you're going to put qualified wages, you're going to put supplies, you're going to have your base amount, and it spits out a credit. And if you go to payroll, obviously on page 2, you can elect to put it towards payroll. It's changing. And when we say memo statements, obviously that's something that was required for amended returns up through the 23 tax year, but the 24 year, can you kind of give just a kind of a nice 10,000 foot view of some of the things we're going to have to identify now on the tax form that we previously did not put on the tax form unless it was an amended return?
Sure. Yeah. One of the main things that is changing is that we'll have to identify business components. And that is something we did on memo statements for those amending, but not something that was necessary when claiming year over year. So going into 2024, that is something that we're going to have to make sure we're including in those tax forms, which means during field work, we're going to have to get ahead of that. So if companies want to prepare for that best, they would have a qualified project list listing all of their projects, figure out which one of those are qualified. From there, identify a business component, whether that is a new or improved product, process, technique, formula, invention, computer software, the list goes on. We just have to make sure we're identifying one of those to say this is what they worked on within this project.
So when we say business component, because that's something that obviously the IRS has been dialing in over the past few years, it is really what is the intent of this development project?
Correct.
What is the technical objective? Okay, that's really what we're looking at.
Yes, and the way that we can even hone in on that even more is to make sure that we're listing the type of hard science that's used in that as well, whether that's engineering, math, computer science. We're going to stay away from any activities that we're doing based on those soft sciences. So whether that's people management, marketing, could even be like economics, we're staying away from those soft sciences, really honing in on the hard sciences that the employees did on that project.
I think what's important for somebody's R&D credit claim is that this is an innovation that they're taking on internally. If they're going out and getting trained on something, that's not qualified.
Right.
If they're going out and just implementing best practices, that's not qualified. And I think sometimes when we're out with clients, they think of something new, meaning just new to them. But it really is something new to them, and they have, and these are TJ's words, they have the design and engineering responsibilities for.
Yeah, exactly.
And so I think that's something that really we need to make sure we separate when we sit there and talk to a client, is that I know this is new to you, okay? It doesn't mean it's qualified research.
Sure.
Because you have to have those responsibilities. If you're just plugging it in, That's not quite, that's somebody else's research,
Right.
because we've seen that, that anytime somebody thinks new, oh yeah, this is qualified research. No, it's not.
Right. Yeah. We really want to make sure that we're just including the time that they have to spend on the actual engineering or designing of the product, process, et cetera.
Yes. What would you say, in thinking about all the projects you worked on and the experience with clients, what do you see clients struggle most with, and how you've been able to really bring peace of mind to them as you are helping them build their credit claim?
I work on a lot of transition clients, maybe from other firms that have claimed the credit in the past for whatever reason and are transitioning to us now. And I think one of the biggest things that people have struggled with is coming up with a estimate of qualified time on the actual project that they are working on. And we do have some documents to help with that. But just yesterday, we met with a client that was struggling, trying to figure out exactly how much time is qualified, and really going over the 4-part test that all projects need to qualify under, walking them through a few internal projects that they worked on to go through that 4-part test with them so they understand in their own words with their own projects, I think is something that has really helped bridge that gap.
You mentioned, and I appreciate how you use the term transitioning clients, because, you go back, and we've been doing this a long time at this firm, and a lot of our clients, obviously, they may be new to us, but they're not new to the R&D credit. They may have used another provider. They've done it themselves. Their CPA did it, or they used another practitioner do it. What would you say, in transitioning to McGuire Sponsel, some of the myths that we come across? I think some of the things that, as people have been miseducated on the R&D credit, what would you say a couple of the common things you see that we have to, I don't want to use the term correct, but put them on a better path?
Sure. Yeah, there's a few that come to mind. One of them is who should be included in the credit. We can include anyone that is directly technically involved, but we can also include those that are supporting qualified research. We always say we want to include the brains behind the operation, and sometimes that's the hands as well, but we want to make sure that we're really including those that are working on the design, the engineering, the programming, and making those technical decisions as well. So there may be some managers that aren't on the line anymore, but they are in those meetings that are making decisions on the upfront design. We can include their time that they're spending on research and development on that particular project as well.
Okay. How about the other thing that I run across in being involved in some of those transition clients is how they handle supplies.
Yeah.
How do we handle supplies, Audrey?
Sure. Yeah, that was the next one that came to mind. So a lot of times we find really large amount of supply costs that have been included in the past. Our firm in general is a little bit more conservative with our approach. We want to make sure that we're only including the supplies that have that technical uncertainty surrounding them. So not all supplies used on a qualified project, but really the supplies used that are then scrapped, maybe used for a prototype, those that truly have uncertainty in them, those are the ones that we only try to include.
And I think another thing to add on to that, because I completely agree, is that if you have a purchase order, if you're a company and you get a purchase order from, call it John Deere, to build flywheels, and you have to manufacture, and let's say it's a new prototype model for John Deere, the John Deere is going to buy 10 from you, okay? Those 10 that are under the purchase order are not qualified supplies. Now, if you got to build 20 to get 10, the scrap is includable. I think that's one thing that's important, is that when you look at supply costs, if you have a purchase order and you're gonna bill your customer for X number of parts, the cost of those parts is not qualified because you got a purchase order on them. It's the scrap and the consumables that took to get to those 10 parts or how many parts that your customer is going to buy. Is that correct?
Right. Yeah, exactly. So not only those scrap materials, sometimes we can include like the first run of a product if there's uncertainty surrounding how that is going to be done and maybe the capability or the methodology of that. So yeah, just those materials that are used for research and development that are typically scrapped at the end.
Okay. Kind of another expense that comes up a lot is software. Okay, is that a company has gone in and they bought new software. All right, is that how do we handle those conversations and treat software? I'm not talking about a software company. I'm talking about a company that's invested in software. Walk us through that.
Sure. Typically, we wouldn't include the cost of the purchased software in our studies. Where we, possibly could include some expenses would be the time spent internally if they are custom coding that said software. It can get a little bit tricky. There are other rules associated with software as well that we have to be careful for. And perhaps that software then implemented a new process for, let's say, the manufacturing floor. We could include the time spent on the new process, the people's time within that process to create it. But the actual purchasing of the software would typically not be included in our studies.
A lot of times people, when we talk about the R&D credit, we focus on product development. Okay, it's developing that, trying to figure out how to manufacture that part, or equipment manufacturing. I know you were at one in St. Louis a couple weeks ago, or a technology. But there's also qualified research attributes within process development. Okay, and years ago, McGuire and I had a colleague that would always say, "Oh, if you're making products faster, better, or cheaper, you have qualified research." And didn't love that saying. I think it was pretty broad. But could you kind of walk us through a couple scenarios where process improvements in investments by our clients has catapulted that into qualified research?
Sure. There's a couple manufacturing clients that we've worked on recently that have developed these new processes to maybe create a product more efficiently or for a cheaper cost. Those reasons would definitely be qualified. It would have to, have some type of hard science as well. If you're just moving around equipment to make more room in your warehouse, that would not be qualified.
So like lean manufacturing, Six Sigma, that doesn't catapult you into qualified research automatically. It could trigger an innovation, but that's not a qualifying attribute.
Right. Yeah, we want to make sure we're drawing that distinction. The times when it would count is if, like I said, if you're trying to create something more efficiently and it goes through that engineering process and there's some type of hard science, technical work, maybe some sort of technical uncertainty within that being done, that could count as qualified research.
The importance of fieldwork. I think that's something that, as I look at since COVID, obviously in our world today, sitting here in 2024, it feels like we define things as pre-COVID and post-COVID. Mm-hmm. I'm an old soul. I know I am. I got the gray hair to prove it. But I think one thing that I think is inherent for many of our clients is the importance of on-site fieldwork. Mm-hmm. Walk us through that. Walk us through the fieldwork and the importance of that and how that creates efficiencies and knowledge that will benefit the client.
Yeah, I will always stand on that meeting people in person, face-to-face, is always going to be a more genuine conversation than over the phone, over a video call. I've had plenty of clients where, they wanted to maybe get the study done really quickly, a tight turnaround time, and we did it remote maybe the first year, which we don't typically suggest. And then the next year we've gone out in person, and time again, they've said, I wish we would have done it in person the first year. I do think going in person is absolutely the best way to go about field work. And it doesn't have to, take up everybody's time all day. I think maybe that's a misconception. Really, we're asking for maybe 30 minutes of the qualified individual's time up front, whether that's, maybe the controllers involved, CFO, maybe the head engineer, and the plant manager.
Well, I think so many times, and go back to the word transition clients that you used earlier, there are so many times that we've done field work on the first year of that transition client, and maybe they've done everything remote years prior. Maybe this is even before COVID. Is that I always get the comment that, boy, we have such a better understanding of qualified research. Mm-hmm. We have such a better, but I think also, Audrey, there's more buy-in.
Yeah. There's
more buy-in from the client's team. When you're sitting there and the CEO or the owner or the CFO is sitting there telling the technical leads, hey, this is what we're doing. There's more buy-in when you're in person as opposed to a remote environment. And that's why we will always, I hope that the firm will always make that investment and lead with on-site fieldwork. And even if a client pushes back a little bit, now some clients, a software client, that's not nearly as important, or a company that's a full remote and work environment, obviously there's no purpose in doing on-site fieldwork. But man, so many of our clients, I think it benefits us, and most importantly, it benefits the client.
Yeah, I couldn't agree more. A few months ago, I went up to a client in DC that was doing things with a previous provider remotely, and this actually was a software company. It was one of the first ones I've gone to in person, and they were so grateful that we came, and I was also so grateful that we came. It's so much of an easier conversation when everybody's in the same room. They can bounce ideas off of each other. They can bring up projects that they've worked on, and others can chime in. So I just think the conversation flows so much smoother when everybody's in person.
With that, Audrey, thank you so much for joining us today.
Thanks, TJ. Appreciate it.
Thanks for tuning in today. Remember to subscribe to Let's Talk Tax podcast channel on YouTube to be notified and receive all new episodes.